How significant is this ruling on Zuma for this very heated and important election that is happening this weekend?
Yeah, Joumanna, we're just about a week from those elections. Look, it's significant. If you think about what you mentioned, Zuma was really the wild card here, and the MK party was the big wild card. And so what we're hearing is, although, him not being necessarily a candidate may not have the biggest outcome, the question is, what will his party, the MK party, do then? What will the turnout be like? Will they be more emboldened to come out and turn out the vote? But what we're seeing from the latest polls is that the MK party is likely to become the third largest party. The ANC now, which is the ruling party, they're still expecting to get this majority. We heard from President Cyril Ramaphosa yesterday, still feeling very confident that they will get the majority, but the polls are still showing that they could dip below this 50%. And then, of course, there's the main opposition party, the Democratic Alliance, which may get just over 18%. So the question really is, will the turnout be there for the MK party and also for the ruling ANC, and what does that mean going forward?
At this point, what do you think markets are actually anticipating in terms of outcome? And from what I can see, they seem to be coalescing around the view that the ANC will actually manage to get a majority. Is that what you're hearing as well?
Well, it's fascinating, Joumanna, especially if you take a look at the Rand, and maybe we can look at that really quickly, because we're seeing the Rand at a 9-month high against the dollar. And really, if we take a look at what things were looking like a year ago, President Ramaphosa and really the Rand was in a very precarious situation because there was concern that potentially we will see an ANC have to team up with some of these lefter-leaning parties. Now we're seeing the Rand right now, there you go, dipping down to a 9-month high. And what we're hearing from a lot of strategists is potentially we will see continuity after this May 29th elections. Potentially, if there is a coalition, it will be one in which there are still market-friendly policies. And so it will be really interesting to see how the markets react continuing as we lead up to May 29th and after.
Yeah, and of course, markets are speaking for themselves. Well, sticking with South Africa, as Jennifer was just talking about, the Rand has hit a 9-month high against the dollar. The currency rose on sentiment, as Jennifer was just saying, that the ruling ANC will win enough votes to avoid being forced into less market-friendly policies. So to broaden out the conversation, we are going to be speaking to Annabel Bishop, the Investec chief economist, who joins us from Johannesburg. Good morning to you, Annabel. Maybe your thoughts on what you think the most market-friendly outcome will be, and if the ANC do stop short of getting an outright majority, how damning could that be?
Yes, hi, thank you. The ANC has said it's still aiming for an outright majority, so that's their key election policy. They're not looking to go into coalitions. I think markets have gained comfort from that. And of course, the ANC election machine does tend to kick off just before the election as well. And we have seen a lift in support. In fact, there's a daily poll that comes out from the Social Research Foundation, and that's giving us clear indication the ANC is making some gains. We do expect, however, that if it gets potentially maybe closer to 45%, it could well go into coalition with a centrist party called the IFP and perhaps a couple of other tiny parties, still allowing it to get over the 50% mark.
Annabel, what do you think that means then for the Rand? We were just taking a look at it, and really all eyes are on this May 29th election. I mean, do you anticipate the Rand will continue, though, to strengthen?
Yes, look, I think what we're seeing at the moment is the risk premium coming out of the domestic currency. We obviously saw significant risk premium in the bond market and in our Rand ahead of these elections, and worries that the ANC might choose to go into coalition with an extreme left-wing political party. As this seems to be becoming significantly less likely, the Rand is factoring out this risk premium, and I think returning to where the other emerging market currencies are, which of course are all anticipating interest rate cuts in the US this year, and that of course would see them stronger as well.
Annabel, we have a CPI print coming up, I think in about half an hour's time. It's going to be a crucial print ahead of that upcoming Reserve Bank meeting next week. What do you think, what are you looking for in these numbers? Because so far, inflation has proven to be stickier than what markets had been anticipating. And to what extent do you think food prices and perhaps that the drought has been less severe than expected could also influence this final number that comes through?
Yes, look, we are seeing CPI inflation this morning, as you said, and of course it is remaining above 5%. In South Africa, the key inflation midpoint of the target range, the point that we're targeting, is 4.5%. And we think that inflation will remain above 5% when it's printed today. In fact, again, for the rest of this first half of the year as well. We think that inflation could only come down towards the 4.5% mark in the last quarter of this year. So that really is showing the stubbornness of inflation, the stickiness, as you mentioned, and of course, food price inflation, the largest component. We have, however, seen limited effect coming through from the poor weather conditions that we've seen in South Africa. We obviously have seen extreme heat, and we know that ties back to climate change around the world. We've seen weather disruptions elsewhere. But of course, for South Africa, not just food prices, but also fuel prices are key as well for our inflation print. Those have moderated recently, but they won't reflect in the current numbers. Looking forward, CPI inflation, as we said, is probably likely to remain above the 5% mark. And the Reserve Bank worries that it might only come down to 4.5% next year. Such is the stubbornness that we are seeing in disinflation.
Well, and Annabel, I mean, that sort of points to the fact that a lot of this is imported to a certain extent. I mean, does what we're seeing with the Fed potentially have an impact in the short term in terms of, the inflation picture here in South Africa?
Yes, I think you're right. The international commodity prices are a key driver, not just for the rand, but for inflation as well. And of course, that's even though we're a food producing country, we're a net exporter of food in South Africa. The situation really is that we price our food commodity prices at the agricultural level, that is, against international prices, which, as you know, are dollar-based. So the exchange rate does have an impact as well. Of course, the rand has moved significantly stronger this month, and over the course of last month as well, we did see some movement beginning. So when we see the next inflation print, we think we'll see an improvement because of that. But unfortunately, these prior high fuel and food price inflation, because of the higher rand, obviously will provide some stubbornness there for inflation.
Final quick one for you, Annabel. What are you penciling in terms of rate cuts out of the South African Reserve Bank at this point?
So we think that it's going to be a risk of no interest rate cuts this year. The very earliest we may potentially see one is in November, but it's really starting to look like it's only going to be in 2025. We continue to believe the United States will probably cut interest rates before South Africa. Our Reserve Bank will likely be quite happy with that outcome, given that it would widen the very narrow differential between South Africa and US interest rates that occurred as the US hiked its interest rates quicker than South Africa in its interest rate hike cycle. So we think that while there's a slim possibility of a 25 basis point cut in November, it probably will now only occur in 2025.